Okay, so I think we're going to get started. Welcome to this webinar. We're so excited to be offering this information to you about the PSLF program. My name is Nancy Neerman. I'm the Assistant Director of the Education Debt Consumer Assistance Program, and I'm here with three people from the CUNY University Benefits Office, Talon Spengian, Matthew Manfredi, and Jenna Maynor-Pilgrim. So just a few housekeeping items. I'm going to be doing the presentation. If you have any questions, we ask that you put them into the Q&A box. There's a lot of people on the call. We'll try to get to as many questions as possible. I'll be breaking periodically throughout the presentation to try to field the most frequently asked questions. I also have put in the chat box the EdCap contact information. If you are interested in contacting us after the presentation to answer a question or to get a one-on-one, you can do so. I will just provide a little bit of a disclaimer there. We are getting a lot of inquiries these days, so we will get to you, but have some patience. It may take a little while for us to get back. Just so everybody knows, you will get a copy of the slides and a recording after the presentation is over. So don't worry about that. If you miss anything, you'll be able to kind of go back and review. So with no further ado, I'm going to share my screen and we will start. And I will also stop video. Okay, if somebody from CUNY University could just tell me that you can see the screen and confirm that you can see it. Okay, sounds great. All right, so today we're going to talk about student loan cancellation and the Public Service Loan Forgiveness Program, and specifically the PSLF waiver. It's a packed agenda. I'm going to talk a little bit about our organization. We're going to talk about the cancellation. This was the debt relief plan that was announced a couple of weeks ago, which is actually a separate program from Public Service Loan Forgiveness. And then I'm going to go into the topic at hand, which is the Public Service Loan Forgiveness Program and the temporary waiver. And at the very end, we're going to talk a little bit about the PSLF New York State bill, which very exciting news as we are doing this presentation is in the process of being signed by the governor at BMCC, and EdCap director is actually at that presentation. So let's start with a few words just about EdCap. So EdCap stands for the Education Debt Consumer Assistance Program. We are a program initiative of the Community Service Society, or CSS. CSS is a large nonprofit organization. It's been around for over 175 years. Our program was started in 2019 specifically to deal with student debt crisis, both in New York and throughout the United States. Student debt is the second largest consumer debt in the country. It's a $1.7 trillion issue nationally and over $100 billion issue in New York State itself. And what we do is we're here to offer free and unbiased services. So we're not part of the government. We're not affiliated with the loan servicers. We are just here to help you navigate through what is an extremely complicated system to help, and we would advise on repayment options. We can help you rehabilitate your loans or prevent your loans from defaulting to avoid things like involuntary collections. We'll help you apply for loan forgiveness and cancellation, which we're going to talk about today. We do consolidations, which is sort of a part and parcel of the PSLF waiver situation right now. We'll help request deferments and forbearances, and we'll also act as an advocate for you if you're having any kind of discrepancy with your loan servicer. So the first thing we're going to talk a little bit about is the student loan cancellation announcement. This was made on August 24th by the Biden administration. And what it is a targeted plan to cancel up to $20,000 in student debt across the board for federal student borrowers. It's estimated that about 20 million borrowers are going to have their debt completely wiped out through this, and many more will benefit by having partial reductions in their debt. So eligibility for this program: any loan that was dispersed prior to July 1st, 2022 is eligible. So that would include people that may be currently in school. And you're eligible if you meet the following income requirements. For individuals who earn less earn less than $125,000, or married couples or heads of households who earn less than $250,000 in either 2020 or 2021, you're going to be eligible for either $20,000 in cancellation for borrowers who have received a Pell Grant, and you would not have had to receive Pell Grants for your entire undergrad experience. If you had one Pell Grant, you're going to be eligible for up to $20,000 in cancellation if you meet the income requirements. If you don't have any Pell Grants, you would be eligible for up to $10,000 in cancellation. And by the way, this does apply to Parent Plus loans. Now, borrowers, most federal student loan borrowers are going to be eligible. Anybody that was eligible for the COVID forbearance, where your loans where your payments were suspended automatically and the interest rates went to zero starting in March of 2020, anybody that was eligible for that is going to be eligible for the loan cancellation program. Those that are not eligible if you have what's called a commercially held FFELP or a Perkins loan, you are going to have to consolidate those loans. And if you're not sure what you've got, you can check your federal student aid account, you can contact your servicer, but here are some hints. You know you'll have a commercially held FFEL loan if your loans are still held with Navient or they're still held at AES. If you've been required to make payments during the COVID forbearance, those are commercially held loans that are going to be required to consolidate for the purposes of loan cancellation. But just because you have those commercially held loans doesn't mean that you're shut out. Do the consolidation and you'll be eligible. The application process, this is what we know to date. Remember, this was just announced a couple of weeks ago. The application isn't actually out yet. So this is what we have been, this is the guidance that we've been provided by the Department of Education. About 8 million borrowers are going to get automatic cancellation, and that is because the government has their income information from 2020 or 2021 on record. For the rest of the borrowers out there, and that's up to 40 some odd million, there will be an online application that will be available in October. Our understanding is that the application is going to require that you attest to your income. And that what that means is that you simply are going to have to write down what your income was in 2020 or 2021. You're not going to be required to provide tax returns and other documentation, although we understand that there is going to be some spot checking and auditing behind the scenes. It should be a relatively easy application. The online application is supposed to be available in October. They're supposedly going to make paper applications available a little later on. Now, what they're telling us is that once you submit the application, you should get cancellation within 4 to 6 weeks. We'll see whether they're able to stick to that timetable. But the guidance now is if you want your cancellation before the end of the year, so before payments resume in 2023, you need to submit the application by November 15th. But you will have up until December 31st, 2023 to provide an application and get your balances forgiven. There's going to be a number of different links throughout this presentation that when you get the presentation, you'll be able to click on and get a lot more information. One of those is with studentaid.gov. They've got some great Q&As and FAQs on there that you can pour through and get a lot of your questions answered about this process. So action steps that you need to take, and you're going to hear this as as a mantra throughout this presentation. Make sure that your contact information is up to date with studentaid.gov and with your servicer. And just to be clear, the servicers are organizations that are contracted by the Department of Education to administer your loan. So they're the folks that send you the bills. They're the ones that you pay the bills to. You often file applications with. They're the ones that you call when you have questions. And that would be the Fed loans, the Mohilas, the Oslas, the Ed Financials, the Great Lakes, the Nelnets, and others. Those are the loan servicers. Studentaid.gov or Federal Student Aid is the Department of Education's website for everyone that has federal student debt. So if you've got federal student debt or had federal student aid, you're going to have a federal student aid account, whether you know it or not. If you're not sure what that login information is, you can click on this link and create an account for yourself. So you want to visit this site. Also on the studentaid.gov site, specifically this link called Department of Education subscription page, you'll be able to click on that and sign up for updates. And we urge that you do. You'll get direct updates from the Department of Education when there's new information out. ForgiveMyStudentDebt.org has a really extensive frequently asked questions list that we find really helpful. Some of the other relief that was announced along with the loan cancellation on August 24th is that the Biden administration plans to introduce a new income-driven repayment plan. And this is really exciting. It's going to substantially lower monthly payments for a lot of borrowers. Now, we don't know exactly which borrowers are going to be eligible for this plan. We hope it's going to be open to everybody. That's not a guarantee. But it's going to particularly benefit those with low to moderate income so that it will make the payments in these IDR plans much more affordable than they currently are. That plan should be available if it passes the next hurdles sometime in the latter part of 2023. The administration is also proposing permanent changes to the public service loan forgiveness program, sort of patterned on some of the changes that were made during the temporary waiver period that we're going to discuss. So this would be things like allowing late or partial payments to count, or granting credit for certain periods in a forbearance or deferment. And there's more information. We have a dedicated webpage on our website about this particular issue. So that's the debt relief plan in summary that was announced on August 24th. Now we're going to talk about the public service loan forgiveness program and the temporary waiver opportunity. But let me just say beforehand that the debt relief program and the loan cancellation is a completely separate program from public service loan forgiveness and the temporary waiver opportunity. You can actually pursue both at the same time. So you shouldn't necessarily stop pursuing PSLF because you think your balances may be canceled by loan cancellation. You want to do what you have to do for both programs, and whichever one sticks first, that's going to be the best one for you. So public service loan forgiveness overview. The program was created in 2007 to incentivize individuals to continue to work in public service. And I don't have to tell you that a lot of public service jobs require that you accumulate, that you have educational credentials, which cost money. But the income from the public service jobs isn't necessarily enough to allow people in these jobs to pay the loans off in a reasonable period of time. So they created this program in 2007 that was meant to forgive federal student loan balances for borrowers who had full-time employment with an eligible employer after making 120 qualifying monthly payments. So that's basically paying into the system over a 10-year period. The 120 qualifying payments are not cumulative, are not consecutive. They're not required to be consecutive, they're cumulative. And what that means is that you can work 3 years, for example, in public service, accumulate 3 years of qualifying payments. You can take a break, go to the private sector for a couple of years. If you decide to come back to the public sector, you don't lose that first 3 years of qualifying payments that you accumulated. And remember, the public service loan forgiveness program is not a program that you enroll in. It's a program that you accumulate required payments towards until you hit the 120 mark. And one of the best features about this program is that the forgiven loan balances are not taxable. So this is unlike most forgiven consumer debt in the United States, where the government considers the forgiven balances income, and they send you a 1099 and you have to pay a tax on it. That's not the case with PSLF. When your balances are forgiven in PSLF, they are not taxable at the federal level, and in most cases, they're not taxable at the state level either. So public service loan forgiveness, when the program started in 2007, the first applications really rolled in about 10 years later, so late 2017, early 2018, and the rejection rate was just abysmal. In the first year, the rejection rate, I think, was about 99.7%. I mean, literally a fraction of a percent of people were actually getting their loans forgiven. And it really didn't improve all that much up until October of last year. So prior to the waiver being announced, the rejection rate was still 98%. Only 2% of people that were applying were actually receiving loan forgiveness. In response to this terrible performance from the program, the Biden administration announced what's called the PSLF temporary waiver opportunity. And what this does is it waives key program requirements through October 31st, 2022, which is allowing more people to more easily accumulate the credit that they need towards the 120 required payments to get their balances forgiven. So what this temporary waiver period is doing is it's basically going to give you credit for any months that you can prove that your loans were in repayment. Now, in repayment is a repayment status. It just means that a payment was required of you. During the waiver period, they're not actually looking to see whether you made the payment. So you might have been in repayment, but you might have missed a payment, or you might have paid late, or you might have made a partial payment. Those kinds of things are actually not, they're not looking at during the waiver period. They're just looking to see if you were in repayment and that you meet the employment requirements of the program. If you have those two criteria, you're going to get credit for public service loan forgiveness, as long as you were paying on loans at the time, or you had loans at the time. So ultimately what these means is that two of the key requirements that were preventing people in the past from getting credit, the one that required that you be enrolled in an income-driven repayment plan, under the waiver period, you could have been enrolled in any repayment plan over the last 10, 15 years, and you're going to get credit for that if you meet the other program requirements, and if you have the wrong kinds of loans. So under the original program, you had to be in a direct loan. During the waiver, if you have direct loans like FFEL loans or Perkins loans, some of these older loan programs, if you're still in those loans, you will get credit for PSLF if you consolidate into a direct consolidation loan. Under the original program, whenever you consolidated a loan, the payment count towards PSLF would start from the date of consolidation. During the waiver period, if you consolidate before October 31st, they will count and give you credit for periods that you made payments prior to the consolidation. Now, one point just to clarify, under normal circumstances, if you were in any kind of forbearance or deferment, you do not get credit towards PSLF. However, if you were eligible for the COVID forbearance, so if you had a direct loan or certain kinds of FFEL loans, and your loans have been, with payments have been suspended since March of 20 and interest rates set to 0%, if you were eligible for that, suspended payments in the COVID forbearance will count towards PSLF if you meet the employment requirements of the program. However, if you were in any period of an in-school deferment or a grace period or a default, that is not going to count. So we're going to go over the requirements now of the original program and compare them to the temporary waiver. And we'll just do a comparison to see what's changed and what's not changed. So borrower eligibility. Under the original PSLF program, both student and parent borrowers were eligible for PSLF. Now, parent plus borrowers with unconsolidated parent plus loans under the original program still had to consolidate their loans to make them eligible for PSLF. And the payment count would start from the date of the consolidation. Students would also be able to do the same. Under the temporary waiver, which only extends to student borrowers, now student borrowers with the wrong kinds of loans can consolidate them and still get credit for the pre-consolidation loans. Unfortunately, parent borrowers cannot do the same. So parent borrowers, if they do consolidate, and you still can to make yourselves eligible for PSLF, the payment count's still going to start from the date of the consolidation. Just another keynote, another word to parent plus borrowers. If you have direct parent plus loans and you're thinking about consolidating them, you want to reach out for a little advice first. There's some specific issues pertaining to parent plus loans that need to be managed and need to be looked at before you actually go into do a consolidation. So you can either reach out to us or your servicer, and we can sort of help you through that process. The qualifying payment count start date, that has not changed. Only payments from October 1st, 2007 or later will count towards this program. That was the inception date of the program. The loan type, the original program, as I said before, only direct loans qualified. So if you had non-direct loans like FFEL or Perkins loans, you would have had to consolidate those loans, and the payment count would start from the date of the consolidation. Under the temporary waiver, you can consolidate those loans. With the exception of the Direct Parent Plus loans, you would get credit for the pre-consolidated loans. Repayment plans. There are two basic ways to make payments towards federal student loans. There are the standard or traditional plans where the payment is based on the loan balance, the interest rate, and a payback period. Those are like paying back any other kind of consumer loans, like a mortgage or an auto loan. The alternative to the standard plans for many people that couldn't afford them is what's called an income-driven repayment plan, where the payments are based on your income, your loan, your tax filing status, and your family size. Under the original PSLF program, you have to be in an IDR plan for the majority of the life of the loan. Some payments in the 10-year fixed version of the standard plan would count under the original PSLF program, but you would have had to transition out of that plan at some point, because if you stayed in it for the life of the loan, you would pay the entire loan off. There'd be nothing left to forgive after 10 years. Under the original, under the temporary waiver, any repayment plan is going to count. Employment requirements, these have not changed. They're the same with the temporary waiver as they were under the original PSLF program. So you need to be working full-time, and we're going to describe what full-time means in a minute, for a qualifying employer. And a qualifying employer is defined as a 501c3 tax-exempt organization. 501c3 is the IRS designation for a tax-exempt nonprofit. Other types of nonprofits that may not be tax exempt but provide public services, and any governmental organizations like federal, state, local, or tribal. AmeriCorps and Peace Corps also qualify. So of course, CUNY would be considered a governmental organization. Payments under the original program must be made on time and in full. That's fairly self-explanatory. Under the temporary waiver, it was what I was describing earlier. The way they're assessing payments has more to do with your payment status history and not so much the payments itself or themselves. And then the number of payments required, that's the same. You still have to have 120 qualifying payments. So what's considered full-time? And I know this is a key question for a lot of you out there listening. If you have only one job, full-time is considered to be the greater of full-time as defined by your employer, or 30 hours per week. So if your employer defines full-time as 35 hours a week, but you're only working 30, that may not be considered full-time if you only have one employer. Under the, if you have more than one part-time job, as long as all your employers are qualifying employers, if the average work between those part-time jobs is 30 hours or more, that is going to qualify. And we're going to talk more about how this affects the adjuncts and what the PSLF bill is going to do to make it easier and even possible for adjuncts now to apply for this program. So action steps. If there's anything that you want to take away from this presentation, is that there are two things that you need to do to make sure that you qualify before October 31st of this year. Number one, make sure that you have direct loans. And if you don't, if it turns out you've got FFELP or Perkins loans, you must consolidate those loans into a direct consolidation loan in order for them to be reviewed under the more relaxed rules of the temporary waiver. The second thing that you need to do is complete what's called the PSLF certification and application form. This is a form that verifies that you've met the employment requirements of the program. So let's just go over this in a little bit more detail. The kinds of loans that are going to qualify that do not need to be consolidated for this purpose are almost anything with the name direct in the loan title. So if you have a direct subsidized, direct unsubsidized, direct plus loans for graduates and professionals, or a direct consolidation loan, that's going to qualify for the program. You are not required to consolidate those loans to get the benefit of the waiver. Direct plus loans for parents. Now that's the one exception to the having the name direct in the role, having the name direct in the loan. Direct plus loans for parents are not going to qualify for the waiver, and they're not going to qualify for PSLF unless you consolidate them. So again, you can consolidate them so that you can get credit towards PSLF going forward, you will just not be able to get any backwards looking credit. And just a reminder, if you do have Parent Plus loans and you're considering consolidating, get some advice first before you go through with the consolidation. The other kinds of loans that do have to be consolidated would be the Federal Family Education Loan Program, FFEL. Any kind of FFEL loans, whether they're held with Navient or not, are going to have to be consolidated, and any kind of Perkins loan is going to have to be consolidated. So how do you know if you have a non-direct loan? Well, you can do one of two things. You can either call your servicer or call Federal Student Aid and ask, or you can do what we call DIY it through your studentaid.gov account. So you want to go to studentaid.gov, and again, this is the Department of Education's website. You want to log in using your FSA ID or create an FSA ID if you don't have one. And then when you're in, from the menu, which is going to be your name at the upper right-hand corner of the page, you're going to go to My Aid. Once you get into the My Aid section, you're going to scroll down until you see loan types. And you can see here that you've got a number of different categories of loan types. So this is giving you part of the story. It's telling you that this person has consolidation loans. They at one point had subsidized loans. They at one point had unsubsidized loans. What it's not telling you is what kinds of consolidation loans or what kinds of subsidized loans they've had, because there are different kinds. There's either, it can be a direct consolidation loan, it could be a FFEL consolidation loan. You can have a direct subsidized loan or a FFEL subsidized loan. So the next step would be to click on the down arrow next to any category that has a loan balance, and then you'll get the full name of the loan. So you can see here, in this case, this individual has direct consolidation loans. She does not have to consolidate any further. If that had said FFELP, she would have to consolidate. If there was any balance next to a Perkins loan, that would have to be consolidated as well. So now you've determined that you have non-direct loans and they will need to be consolidated. How do you go about doing that? The easiest way to do this is online, again, from the Federal Student Aid website. And when you get this presentation, you can just click right on this link here. It's going to bring you to the consolidation portion of the website. You're going to log in with your FSA ID, and then you're going to click start, and it's going to take you through the process. It's about a 15-minute to half-hour long process, depending on how comfortable you are and how well the website is working. So just some tips through the process. The first question it's going to ask you is, do you want to delay processing? You're going to say no to that. You do not want to delay processing. You want to do this ASAP. The second thing you're going to have to know is, because you're pursuing PSLF, there is only one PSLF servicer out there right now, and it is MOHELA. So you're going to have to select MOHELA as your servicer. And then you're going to come to a portion of the application where it's going to ask you to select a repayment plan. And this is where a lot of people sort of get tripped up a little bit. You can select a traditional plan, or you can select one of the income-driven repayment plans. There are 4 different income-driven repayment plans: payee, repayee, IBR, and there are 2 different versions of IBR, by the way, or ICR. Don't be intimidated when you get to this portion. There's an estimator there. I know this is a very confusing part of the application. Choose whichever program or whichever repayment plan seems to be the best for you. The one thing that I can tell you about the repayment plans is they can be easily changed. So you want to just choose something to get through the application. If it turns out after the application that it's not the right plan, or the payment isn't coming out the way you expected it to come out, and there's a cheaper option for you out there, that can be easily changed. So don't worry about what you click to get through the application. It's not set in concrete. So just to recap, you want to make sure that you have direct loans. You're going to determine your loan types. If you have non-direct loans like FFELP or Perkins loans, you're going to have to consolidate them. And you can do that from your Federal Student Aid account at studentaid.gov. If you're confused with the process or you're struggling to do it and you need help, give us a call. You can also give your loan servicer a call and they can help you through the process. So the second part of the 2 steps that you need to take is that everyone is going to have to file a PSLF certification and application form for every employer that you've had over the time period that you want reviewed. And that's since October 1st, 2007, because remember, payments prior to October 1st, 2007 don't count. So if you had an employer from 2001 to 2005, you don't have to worry about going back and giving them one of these forms. It's just not going to count. So it's a 2-page form, and this is a manual version of the form. You would be responsible for filling out page 1. Your employer would be responsible for filling out page 2. Now, if you need to consolidate first, if you need to consolidate your loans, you want to submit your consolidation application first. You just have to file the application online by October 31st in order to meet the deadline. So consolidations can take these days up to 3 months to actually complete. They're not requiring that the consolidation be completed in order for you to meet the PSLF deadline, the waiver deadline on October 31st. You just must file the consolidation application online by that date. Once you file the application online, you can then submit these PSLF certification and application forms. They just must be at MOHELA by October 31st. I'm going to talk more about the ways to get it to these forms to MOHELA in a minute. So where can you get the form? There's 2 ways to file this form. You can either print out a PDF, and you will have, again, be able to do that from this presentation, and do it manually. So you would manually just fill in everything on page 1. Your employer would manually fill in everything on page 2. The other option is to use what's called the PSLF help tool, which can be accessed through your federal student aid account. And what the help tool does is it asks you a series of questions, and it will auto-populate everything on these 2 forms. Now, we highly recommend that you use the help tool whenever possible. There's 2 benefits to doing it this way. Number 1, it cuts down on the number of errors that employers tend to make when filing these forms. And number 2, we understand that the servicer is prioritizing the review of forms that are submitted via the help tool versus ones that are submitted manually. But you are going to need a couple of things bits of information to use the help tool. You're going to need your FSA ID to log into your account. You're going to need your employer identification number, and you can get that from your W-2s or by asking the HR department of your employer. And you're going to need your exact employment dates. And if you're going to be doing this, you're going to need the exact dates, so the month, the date, and the year. One thing to note with the PSLF help tool, it will generate the form, but it doesn't send it anywhere. So after the form is completed, you're going to have to print it out. You're going to have to submit it to your employer to have it signed, and then you will have to send it to MOHELA. If for some reason you can't use the help tool, then don't worry about it. Just print the paper version of it and submit it manually. Now, some tips for CUNY employees. You want to always consult your W-2 or your HR department to figure out what the correct EIN number is. But the EIN number for the first EIN number you see here is the number for all New York City employees, and that would apply to any individual that's employed by the city and working at the community colleges. The second number is registered to the City University of New York State. So this is going to be for individuals employed by New York State and working at a 4-year institution. Other tips for CUNY employees: for every period of qualifying employment or teaching contract you've had since October 1st, 2007, get your EIN number, get your employment or contract dates. Again, the contract dates must be full dates, and check off your employment status. So full-time or part-time. And if part-time, you want to determine the following: the number of in-class credits or teaching hours. And we're going to talk a minute for adjuncts about the multiplier, and other paid number of hours. So for things like office hours and whatever other hours you put in towards your job. Do you need to file a form for each qualifying employer? Yes, you do. So if CUNY is not the sum total of all of your experience, then you want to file a form from every single employer. There is currently no central PSLF form processing system for CUNY. So if you worked at multiple schools and multiple campuses, you are going to have to go to each job or campus to get a completed form. And you can verify that the employer qualifies. So if you have older employers and you're not sure, you can click on this link here. You don't have to actually log into your account. It's the PSLF employer search tool. You would need the employer identification number. You can plug that in and determine whether or not a previous employer might qualify. Some other tips that you need to know: only wet or hand-drawn signatures are going to be accepted. So this applies to you and your employers. No electronic signatures and no scripted fonts. Now, they will accept a scanned version of a wet or a hand-drawn signature. That's fine. Doesn't have to be the original, but steer away from the electronic signatures or anything computer generated. In terms of who can sign off on these forms, an authorized individual who has access to your employment record. So this is typically somebody in the HR department. And I presume that you pretty much at this point, people know where to go to get these forms signed within the CUNY system. If not, I'm sure that some of the people on this call can maybe provide some guidance. You want to make sure, if you generate the form either by the help tool or you're doing it by hand, that section 4, and let me go back here. I know it's a little bit hard to see, but section 4 of the employer page, you want to make sure that everything is filled in here. So they can't just sign and date it and send it in. This has apparently happened on a number of occasions. People forget to fill in. They must fill in their name, their title, the phone number, and the email. The entire section must be filled in, and it must be legible. The other thing that we want to mention is for any previous employers, if you have trouble getting a signature from a previous employer because maybe they're out of business or they don't have your information any longer, you can check off this box on page 1, which is right above where the borrower signature would be. And there's a question about this also in the PSLF help tool. You can actually check the box off saying that you were unable to obtain a signature. And then you would follow the instructions, and the instructions would be that you would then fill in everything in section 3 that normally the employer would fill in, and leave section 4 blank, and you would submit the form that way, but you need to submit it with some proof that you were employed during that period. So you would have to find some W-2s or pay stubs, and then you would be able to get credit for that time period. Okay, so now we come down to where to submit the PSLF form. So as I said earlier, MOHELA is the new servicer managing the PSLF program. Up until recently, it had been FedLoan servicing since 2012. FedLoan announced last year that they were leaving the federal student loan servicing business. They've been transitioning people away from, they've been transitioning people or transitioning their portfolio since July in earnest. So anybody that is on the PSLF track that they know about, so meaning people that already had qualifying payments or had recently filed their PSLF certification forms, they're being transferred to MOHELA. But it's possible that if you haven't done that yet, your loan will be transferred elsewhere. If your loans are with MOHELA, you want to upload these forms to your MOHELA account online. Then you would have some record of exactly when the form was being submitted, because remember, these forms have to be submitted by October 31st. If your loans are not at MOHELA, and that could apply to a lot of people, you're going to have to mail and or fax the forms, and we've got the information right here. We want you to do this in a way that you get a receipt. So mail it from the post office via certified mail and or registered mail and get a receipt. And when you fax it, of course, you want to keep the fax receipt, because that's your proof that you submitted by October 31st. If your loans are with FedLoan, you can still upload the forms to your MyFedLoan account. They are supposed to be transitioned over or turned over to MOHELA. To be safe, though, we're recommending that you also mail and fax to MOHELA. Now, this is brand new information that we just found out last night that I didn't even have a chance to update the presentation with. But the Department of Education has issued some new guidance in terms of submitting these forms. If you generate the form using the PSLF help tool through your FSA account, if you just generate a completed form, the Department of Education will have record of the date that you do that. If you do that before October 31st, even if you're unable to mail the form in by the deadline, they will have record that you generated the form, and they will give you credit for meeting the deadline, even though it's not signed and into MOHELA. So that's really, really good news. Now, of course, you're still going to have to get the thing signed and sent into MOHELA, and we urge you to do that as quickly as possible. But that's really good news to know that they'll accept that as being having met the deadline just by generating a completed form within your FSA account. If you're doing the form manually, if your employer has signed off on the form before October 31st and the date is on there, even if the form gets to them after the deadline, they will accept it. So these are really two new and encouraging details in terms of the way you can get these forms to MOHELA on time. Now, once you've submitted the form, what's going to happen? You're going to see, you're going to get a letter. Now, if your loans are not at MOHELA, they're going to be transferred to MOHELA first, and then these letters will be generated. This is an old Fed loan letter telling you exactly how many qualifying payments you have. It's going to go loan by loan, the number of remaining qualifying payments, and when you may expect to be your eligibility date for forgiveness. You can also, once you have an account at MOHELA, you'll also be able to track your loans and your progress online in your MOHELA account using this tracker. Now, this is the Fed loan version. We've seen the MOHELA trackers. It's exactly the same thing. What you ultimately want to wind up with is 120 qualifying payments. Qualifying payments are payments in the bag. Eligible payments are payments that typically meet all the program requirements. They're just waiting for an updated certification form to verify your employment. So this individual has 108 qualifying payments. They have 37 payments that are awaiting an employment update for an updated PSLF certification form. Once that's submitted, those eligible payments will become qualifying, and they will have more than they need to get their 120 qualifying payments and have their balances forgiven. And then finally, how are you going to know when the loans are forgiven? Well, you're going to get a letter from letter from MOHELA, and you'll be able to log into your FSA account. FSA is the last to know. They have to be notified by the servicer first. You'll be able to log into your FSA account, see this celebratory icon next to the $0 balance, and you'll know that your loans are gone. So just to recap, you want to generate the form, whether you do it through the PSLF help tool or whether you do it manually. You're going to have your employers, each employer that you've had over the time period you want reviewed since October 1st, 2007, sign the forms and date them, submit the forms to MOHELA in the manner that we just described. Keep a receipt, even though they're, of course, providing these different options now to get the applications in on time. You always want to keep a receipt. It's best practice. And then it's going to be a waiting game. It's taking them a while to get through all of this. They have tons of applications. It's probably going to take them well into the rest of the year to get back to everybody. If you've recently consolidated, don't be surprised if the initial count is set to 0 or is very, very low. That's the way they're doing it. You'll get that initial very low count, and then the count will start to increase over time. Once you think you've got a final determination, and you think if you have any issues with it, if you think it's wrong, you want to dispute that. So before we go on, I think I'm going to break because I've been talking incessantly for the last 45 minutes. I think I'm going to break and see, Matthew, if there are any questions that you want to sort of repeat so that everybody can hear them. Matthew, can you?
Yep. Just there are some questions here regarding the slides and the recording. Can you, how will people be receiving the slides?
So everybody that registered for this, we have the emails for everybody that registered for this webinar. So after the webinar, I will email the slides and the recording to everybody that's on that list. And if for some reason you don't get it, our contact information is in the chat. You can just send us an email and say you didn't get it, and we'll send it to you.
Right. I think there were some initial questions regarding the cancellation. So not PSLF, but the cancellation aspect of it.
Okay. So just to kind of recap the cancellation, And again, this is a separate program from public service loan forgiveness. If you have loans that were dispersed, the loans must have been dispersed before July 1st of 2022. So that's presumably going to be everybody on this call. If you meet the income requirements of cancellation, and those requirements are if you were an individual that made less than $125,000, or a married couple, or you're married, or a head of household that made less than $250,000 in either 2020 or 2021, you're going to be eligible for either $10,000 or up to $20,000 in cancellation. You'll be eligible for $20,000 in cancellation if you went to school with any Pell Grants. So you could even have just one Pell Grant for a few $100s. That's going to qualify you for up to $20,000 in cancellation. For everybody else, you would get up to $10,000. And when I say up to, if your entire loan balance is less than $20,000 and you're eligible for $20,000, you would just have your entire loan balance forgiven or canceled. And the process has not begun yet. So most people are probably going to have to file some kind of an application attesting to their income. It's supposed to be a fairly simple application, and that application is supposed to be available in early October. What we would suggest you do is there are a number of links in this presentation to the various websites, including our own, that are providing updates about this, because as I said, it's brand new and it hasn't actually started yet. So you can link to those websites. You can also, again, go to that federal student aid portion where you can actually sign up for notifications so that you're staying on top of this. But the key thing is make sure that your contact information is up to date with federal student aid and your servicer so that they can send you notifications and you'll receive them and be on top of the information.
Okay. We also received some questions regarding the cancellation and for PSLF, for what happens if you had already paid off your loans. Are you eligible for anything?
So potentially not under PSLF, no. Potentially under the cancellation, maybe, if you paid them off, if you made payments during the COVID forbearance, you have the ability to get those payments refunded. And it's actually also our understanding, we just found this out the other day, that if you did make payments during the COVID forbearance that ultimately paid your loans off, and you become eligible for, you're eligible for the cancellation, that they are going to refund you those payments that you made up to the amount of the cancellation you're entitled to. If you paid the loans off prior to the COVID forbearance, and COVID forbearance started in March 13th of 2020. If you paid the loans off prior to that date, I don't believe there's any recourse for that.
Okay. We have a question about if someone is still in school, can they apply for this relief? So
for cancellation, yes. As long as the loans were dispersed prior to July 1st of this year, cancellation, you are eligible, even if your loans were in an in-school deferment. For PSLF, it's a little bit more complicated because if your loans are in an in-school deferment, they're not going to qualify for public service loan forgiveness.
There are some people who are concerned that their loans and their information hasn't been transferred over to MOHELA yet. Maybe you could speak to whether or not they should file forms. You know, it's a good idea to do that. I know you said so. Presentation.
If you've already consolidated and you're waiting, then you're in the queue to be transferred. If you filed the certification forms and you're still waiting, you're not alone. There are a lot of people that are still waiting. You may have received a letter from MOHELA acknowledging receipt of the forms. I just know that there's a long delay. If you're really concerned about it, you can try calling MOHELA just to confirm that they've received your PSLF forms. I'm less concerned about people that may have filed an online consolidation because that's in the system at this point. If you've just simply sent your PSLF forms to MOHELA and you're still waiting, it's not surprising to me that you're waiting. Be patient, it's gonna happen. But if you're concerned and you haven't had any kind of confirmation of receipt, you can contact them to just make sure that they receive the form, or you can resubmit the form. And if you, having said what we just found out last night about how they're accepting these forms by the deadline, if you even have a manual form now that has that your employer signed before October 31st, if you have to resubmit that after the deadline, that still doesn't count as being as qualifying for the deadline.
We have a question about someone who left qualifying employment, was at qualifying employment, then returned years later, and how many forms they would need to fill out in that scenario.
So you only have to fill out forms from your qualifying employers. Now, it depends on what you might have on record. If you had previously filed forms for that prior employer and that information is already on record, you may not have to submit them again, although considering the servicer changes, if you still have the original forms, it might not be a bad idea just to resubmit the original forms. You wouldn't necessarily have to go back and get them re-signed by the old employer. If you've never submitted the forms before, though, you would have to go back to the qualifying employer and have them signed off on. But you don't have to bother getting forms from non-qualifying employers.
Okay. And if people are asking about the 10 years and whether or not that it has to be consecutive?
It does not have to be consecutive. These are cumulative. So that's what I was saying earlier. You can work for 3 years in nonprofit, take a break, go work for a for-profit organization. You won't lose those 3 years of accumulated credit.
Okay. And so some questions about the 120 payments and the application. So we have someone who's made over 120 payments prior to this period of time. Should they apply for PSLF? And then the other is someone who hasn't made their 120 payments and whether or not they should apply for PSLF.
So the answer is yes to both. So clearly, if you think that you've made 120 qualifying payments and you've never filed these forms, you've never gone through the process, absolutely do it, and do it before October 31st to make sure that you're going to get credit for periods that you might not otherwise have gotten credit for, but for the waiver. For people that don't think you have all 120, get whatever credit you can. Remember, I was saying that this is not a program that you enroll in. It's a program that you accumulate qualifying payments towards. So even if you're not at 120, whatever you get as a result of this waiver period, you get to keep going forward because you still will be able to work towards PSLF after the deadline is over. You're just going to have to do it under the original rules, which are a little bit more restricted. So get whatever you can during the waiver while the rules are less restrictive, and that'll get you that much closer to the 120 afterwards.
Okay. Do past undergraduate loans that were paid off count towards PSLF payments if there are still graduate loans still unpaid?
No, nothing that's all for PSLF, any loan that's already paid off is not going to qualify. So it has to be based on your existing loans.
A question on consolidated, someone who had consolidated their original loans some time ago to a significantly lower interest rate. How will reconsolidating now affect their interest rates?
So that sounds like, so understand that when you consolidate loans within the federal student loan system, you don't have the option of consolidating to a lower interest rate. You don't change the interest rate when you do that. So somebody that consolidated their loans to a lower interest rate sounds like they may have consolidated into private loans. And if that's what you're talking about, private loans are not eligible for this. Once you're in, and you can't turn a private loan into a federal loan. I think that's what that question pertains to.
Okay, so just a couple more. Someone's asking for a clarification on whether we need to transfer to MOHELA before we can apply for PSLF. MOHELA is saying that it's taking 90 days. So that would mean missing the deadline for October 30th.
So that's what I was talking about earlier. It's taking 90 days for consolidations. I've heard this, that they're saying that it's taking 90 days for a consolidation to be completed. You don't have to, the consolidation does not have to be completed by the deadline for you to meet the deadline. Meeting the deadline means that you file the consolidation application online. So if you did that tomorrow and it took 90 days for the loans to actually get to MOHELA, you would still meet the consolidation deadline. You just file the application online. If you did it tomorrow, the date would be September 16th. That's before October 31st. That means that you've met the consolidation deadline. You have to meet the 1031 deadline, though, applies to consolidation and to the PSLF certification form. So both things have to be in place before October 31st. But as I said earlier, once you file the consolidation application online, like literally the day of or the day after, you can then do the PSLF certification forms. Because they are now accepting just a generated form within the PSLF help tool, a completed generated form, or a manual version of the form, as long as it's signed and dated before October 31st, you should be good. So you may not get an actual determination for many months after the deadline, but as long as the consolidation application is filed online before October 31st and the PSLF form is either you generate the tool online through your FSA account, even if it's not signed, or you send in a manual signed version after the deadline, but it's signed before October 31st, you're meeting the terms of the deadline, and that's going to allow your loans to be reviewed under the relaxed temporary waiver rules.
Just to be mindful of time, I'll see where we left off in the questions, and maybe you can go on to the next section.
Okay.
We'll get back to the questions after. Okay,
great. So we're going to talk a little bit about the New York State PSLF bill, which, as I said, the signing ceremony started at 10:30. The governor is actually signing this bill today at BMCC. And the bill was put out to basically help adjunct professors who have pretty much been shut out of this process in the past. So PSLF requires the borrowers to meet the full-time definition of work for PSLF purposes. And that meant an average of 30 hours per week, or whatever your employer deemed to be full-time employment, whichever was greater. I don't have to tell many of you, you know that adjunct professors always were challenged by this process because you don't get the kind of credit for the actual number of hours you work. You only get credit for your essentially for your in-classroom or lecture hours. So the bill that's being passed today was sponsored by Assembly Member Epstein and Senator Thomas, is going to address this issue. And what it does is a couple of things. It's going to require, and this is for the purpose of this bill was specifically for PSLF. So anything that we talk about here doesn't impact any other aspect of your employment arrangements with CUNY. It's specifically for PSLF. And it only applies to New York State employers. It's going to require that an employer credit you with 3.35 hours of employment for each hour spent in the classroom or lecturing. So it's a multiplier essentially. And basically, if you have 9 hours in the classroom every week, that's going to come out to about 30, or you have an average of 9 hours in the classroom, let's say, over a certain time period, it's going to come out to a little over 30 hours per week. And that will then allow the employer to deem you a full-time employee for the purposes of PSLF. So the employee will be deemed full-time if they work an average of 30 hours a week, or at least an average of 30 hours per week throughout a contractual or employment period of at least 8 months in a 12-month period. Now, it's our understanding, and this language came directly from the bill, that that last bullet point really applies mostly to full-time teachers, and that for adjuncts, you're going to have to look at the periods of your contract. And if that changes, you'll be updated on that, but that's the best understanding and interpretation of that part of the bill. It's also going to require employers to provide the PSLF form annually and upon employment separation. And as I said, all of this is specifically for the purposes of qualifying you as a as eligible for the PSLF programs, full-time worker for PSLF. So it's not going to impact the amount of money you get paid or any kind of benefits that you've already contracted for. This is only for this specific purpose. And it's going to be, once the bill is signed, these first two requirements are going to go into effect immediately. So they will immediately apply the multiplier to your hours, and it would be a look back to your hours over whatever time period that you want reviewed. And you will immediately be allowed to be declared a full-time employee. The last bit about the requiring the employers to provide the PSLF form annually and upon separation, that's, I think, going to take a little bit more time to implement. Of course, you can always request these forms be signed anyway, but in terms of the CUNY or the employer automatically providing it, that's going to take a little bit of time to implement. So just some Q&A. I think I answered that first question. When does the bill go into effect? What about non-teaching hours? How are they treated? So you're going to count those as regular hours. And basically, those non-teaching hours are going to be included in the multiplier. So you can only apply the multiplier to lecture or classroom time. So for adjuncts, I was going to say the regular hours worked or the office hours would be sort of accounted for by the multiplier. What happens if, despite the multiplier, I don't average 30 hours per week? So unfortunately, that time period, and again, this is going to depend, this is going to go by contract, the time period in your contract for adjuncts, that time period would not count towards 120 if you can't meet the 30 hours. If my hours have varied from semester to semester over the years, should I fill out one form for each semester or one form with the overall average? So for any time period or contract where you've averaged 30 hours, you only need to complete one form. If the contract encompasses more than one semester, and over those several semesters, you averaged more than 30 hours a week, or at least 30 hours a week, then you only need to submit one form. If you teach at 2 CUNY colleges, do you get a certification from each college? The answer to that is yes. CUNY apparently does not have a central PSLF form processing system, so you're going to have to go to each campus right now to get those forms signed. What if I had less than 30 hours at CUNY due to the pandemic low enrollment? Can I combine it with another eligible job? So the answer to that is yes. If you had another eligible job that you were working at the same time, and the two together, they would both be considered part-time jobs. So you would click off the part-time status on both. But if they were two qualifying employers working part-time, but the average over the same time period totals 30 hours or more, you're going to be eligible. And that's under the original PSLF rules. That's not even part of the PSLF bill. I have teaching adjunct hours as well as non-teaching adjunct hours and college assistant hours all at one institution. Should I fill out a separate form for each or combine them? So you can add all your hours together for the same employer. It doesn't matter what kind of hours they are, as long as they all total up to 30 or more, and it's all with the same employer, you can just basically do that on one form. The PSLF form goes to HR before we send it to MOHELA, and this must be done by October 31st, 2022, that's a question mark. And the answer to that question is yes. The submission instructions to MOHELA are on section 7 of the form. I also provided them earlier in the presentation in great detail. If you don't need to consolidate, get the form signed and then send them to MOHELA. And ultimately, what if things go wrong? Well, and sometimes they do. You can always escalate by filing a complaint. You can do this in one of two ways. You can do it through the New York State Department of Financial Services complaint portal, or you can file a complaint with the Federal Student Aid Ombudsman's Group, which can be accessed on the FSA Online Feedback Center website. And that completes the actual presentation. So I guess, Matthew, let's throw it open for the last few minutes just to see if we can answer any last minute questions.
Great. And I think maybe some people are saying that they can't see in the chat the contact info. Is that on the next slide?
Yeah, let me, actually, here it is.
Yeah, so anyone who's asking about the contact info for EdCap, here's their helpline email address and their website for more information. As you can see, they're a great resource. Just for a couple of questions, we had some in here about Pell Grants. And is there a limit to how long ago a Pell Grant
No.
was received? Okay.
If you ever had a Pell Grant. Our understanding is that there's 1 year, sometime in the 90s, it was either 1994 or 1996, where the Pell Grant is missing from the FSA website. But the Department of Education says that they have the information. It just, for whatever reason, did not show up on the FSA website. Normally, when you log into your federal student aid account, when you go to the My Aid section, you'll see a blue circle, which shows the loans. And if you had grants, you'll see a green circle that has a number in it. And those would be whatever grants you were issued. If there's a green circle there, it's more than likely that was a Pell Grant. You can go further and actually click on grants and it'll tell you whether it's a Pell Grant. If you think you had a Pell Grant, but you don't see it there, that might be from that missing year. Stay tuned, because the department has yet to kind of say how they're going to deal with that, but they apparently say they've got the information.
Okay. I'm just going to answer this question. Do the same procedures apply for RF CUNY employees? So the Research Foundation is a separate entity from CUNY, and it's a 501c3. So it could still be eligible for this program. For the documentation and the certification would be done by the Research Foundation's HR department. Okay, so that wouldn't be done by the campus. That would be done through the Research Foundation directly. A lot of these questions were answered in the FAQs. There are some people who were asking whether or not if there's any sort of income limitation to be eligible for PSLF, to have your loans forgiven.
For PSLF, no. For the cancellation, yes. But for PSLF, no. There's no income limitation. Where the income issue comes in is if you're still trying to accumulate qualifying payment credit and you need to do it in an IDR plan. If your income is very high, the payment that you may need to make could be quite high. And depending on what your balance is, you may wind up paying the loan off before you actually get forgiveness, but there is no limit.
Some people asking about deferment. So for PSLF, does that mean if I've done a deferment at least once, does this mean I do not qualify despite not being in deferment anymore? So I guess it's due periods of deferment take you out of the program.
So any period where you were in an in-school deferment is not going to count. So whenever that might have been, whether it was recently or a long time ago, if you were in an in-school deferment, that's not going to count. Now, there was another program, which I didn't even mention, that was announced in April of this year called the IDR account adjustment, which is going to be automatic for most people and may provide an opportunity to have some periods of deferment prior to 2013, again, excluding in-school deferments, and some periods of non-COVID related forbearance to count, both towards IDR forgiveness and PSLF, but that is probably not going to be applied until sometime next year. So for now, you're not going to get credit for any periods of deferment. You might get some credit for periods of non-in-school deferment. Next year, you're going to have to wait and see.
We have some people who have loans that were with Navient, now other different service providers, and that they had been rejected for consolidation in the past. Should they reapply for consolidation now?
Yeah, I don't know why you would have been rejected. There's only some very specific reasons why you might have been rejected for consolidation. So the reasons that I know of that you cannot consolidate is if your loans, if your loans were in default and there is a judgment against the loan, you can't consolidate. If you have only direct consolidation loans, you can't consolidate them unless you have something else to consolidate them with, some other kind of loan. You can, however, consolidate FFEL consolidation loans, and you can consolidate virtually any other kind of consolidation loan, other than, this is kind of an obscure one, but if you have an old joint consolidation loan, that's many years ago, they would allow married couples to combine their student loans together into a joint loan. They actually stopped that program in 2006. But right now, people that are in that kind of a loan cannot consolidate them, although there's a bill in place that's going to fix that. But for the most part, I would give it another shot. I mean, if you've got any kind of FFELP loan or any kind of Perkins loan, as long as it's, even if it is defaulted at this point, because there shouldn't be any collection activities on most of these loans, you should be able to consolidate those. So give it another shot. And if for some reason they're rejecting you, you might want to reach out to us.
And maybe there's a number of questions here saying 10 years of qualification. Can you maybe go through the difference between having 10 years of employment and 120 payments?
Yeah, so just because you may have been employed for a qualifying employer for 10 years doesn't necessarily mean that you're going to have 120 qualifying payments. So remember, a qualifying payment has to meet certain requirements. Under the original PSLF program, a qualifying payment meant that you would have had to have been paying on a direct loan. You would have had to have been enrolled in an income-driven repayment plan for the most part. You would have had to have made your payments on time and in full, and you could not have been in any period of deferment or forbearance. So you could have worked, and also any period where your loans might have been in default or in school deferment would not count either. So you could have worked for 10 years, but if your loan was in default for 5 years, you're not going to get credit for the 5 years that your loan was in default. So you would have had to have met all of those requirements. Now, under the waiver rules, they're relaxing a lot of those requirements. So you will get credit for periods where you were making payments in any kind of repayment plan, as long as you meet the other requirements. You're going to get credit for these non-direct loans once you excluding the Parent Plus loans. You still may not get credit for periods where you were in a default or an in-school deferment. So you have to accumulate 120 qualifying payments and meet all the requirements, and that may not match up exactly with the amount of time that you were employed. But like I said before, I urge you to go through the process and accumulate whatever qualifying payments you can, because you still may get payments under the waiver that you may not be able to get once the waiver is over.
Just a couple more. Is Navient a current Fed loan servicer? And if someone loans have been consolidated with a Navient, can they now reconsolidate under PSLF? Yeah,
so Navient actually last year decided that they no longer wanted to manage loans that are directly held by the Department of Education. And that loans that were directly held by the Department of Education, that would be anything with the word direct in it. And then there are some FFEL loans that are directly managed by the Department of Education. And just to put this in context, these FFEL loans, it's an older loan program. And originally the loans were, the lender was a private institution, but the federal government guaranteed the loan. So they're federal loans, but they're not held directly by the Department of Education. What happened was in 2010, they decided to do away with the FFEL program. The Department of Education actually bought up some of the FFEL loans. So they became FFEL loans that were directly held by the Department of Education, but there are some FFEL loans that are still out there that are commercially owned, or basically not held by the Department of Education. When Navient transitioned most of its portfolio last year to a new servicer named Aidvantage, they still held on to those FFEL commercially held loans. So the answer, it's a long-winded answer of saying, yes, there are some federal loans that are still at Navient, but if you have loans that are still at Navient, that means they're commercially held FFEL loans and they would have to be consolidated for both PSLF and the loan cancellation. It's also possible that you have some FFELP consolidation loans that are currently at Navient. And again, those can be consolidated into direct consolidation loans. But you would not have direct consolidation loans at Navient at this point. All their entire direct loan portfolio would have been transitioned to Avantage at this point. I hope that was clear.
Thank you. And I think that there's just a couple of questions here about the 120 payments. You know, you don't need to have 120 payments in by October 31st. You can still be in the program. Some people are asking about that.
Yeah, so the PSLF program, again, it's not something that you actually enroll in. You're just accumulating credits year by year. So until you get to the 120. So you want to accumulate as many credits as you can. Once the waiver ends, you will, if you don't have 120, you will still accumulate credit. You'll just be doing it under the original PSLF rules. And if at any time you decide that you want to change, you know, your financial circumstances change, and maybe you're making a lot more money and you just want to pay your loans off, you don't want to pursue PSLF any longer, you're free to do that. But it's always a good idea to go through the process of getting the qualifying payments. It's kind of like, think of it as like an insurance policy. I have these qualifying payments in case I want to use them going forward. And for a lot of people, it's going to be, you know, there's no question. Your loan balance is too large and you'll never pay it off in less time than you can get forgiveness. You always want to try to accumulate as much credit as you can. You certainly want to do that now before the waiver ends, because it may be a little, you know, it's more restrictive going forward in terms of what you have to do to get that credit. But yeah, there's no limit on trying to, you know, accumulate credit going forward.
Great. And then to answer one question regarding adjuncts and people who are full-time and an adjunct, if you don't get more credit for working more hours within for a month. So if you were full-time at a CUNY campus and then an adjunct somewhere else, you really only need the full-time line.
Yeah.
Because you can only count that month once as a qualifying payment. And then this is the last one. So the person is asking, I think they have FFEL loans with Navient, and they have a low interest rate at around 3%. When they started consolidation, they were told that it would be going to 6.8%. So they didn't go through the consolidation. Shouldn't it be comparable, or is this standard?
So, okay. It depends. It kind of depends on I don't know whether they had a variable rate. It's possible some of these older loans had variable interest rates, and maybe the lower interest rate was sort of the tail end of the last period that they had that lower interest rate. And when they consolidate, it would go to a more prevailing interest rate, which would be 6.8%. Sounds closer to sort of today than what interest rates might have been a couple of years ago. That sounds like a big jump. The other thing is that sometimes folks like or servicers like Navient and AES would give their clients sort of fairly steep discounts on the interest rates. So if a contractual interest rate, let's say on a federal student loan, was 5% or 6%, Navient might give you a 2% discount for being with Navient. Now, if you consolidated that loan and took the loan elsewhere, it would revert to the contractual interest rate. The biggest discount I've seen from one of these servicers is 2%. So what you just described is bigger than that. I'm not exactly sure what's going on with that. But generally, when you consolidate a federal student loan, the interest rate is going to be the weighted average of the existing loans rounded up to the nearest 1/8%. So a 1/8% difference in interest rates is very minimal. What you just described was, I think, almost 3%. I'm not sure what the issue is there. I will say this: if you're pursuing public service loan forgiveness, just remember that the payment that you're making in an IDR plan is not based on the interest rate, and it's not based on the loan balance. It's based on your income, your family size, and your tax filing status. And if you have a very large loan balance, what you really have to look at is there any reasonable expectation that you would pay that loan balance off before you would receive forgiveness? And this depends on how close you are to forgiveness. If you've got through the PSLF process, if you think you can get 7 or 8 years of qualifying payments, that would mean you would only have to pay for another 2 years on the loans. And if the balance is big enough, you would want to say, well, is there any expectation that I could pay that balance off within those 2 years before I get loan forgiveness? And if there isn't, probably the better bet is going with the PSLF, even if the interest rate is higher, because it won't in the end really matter. But that's something, if you want to reach out to us and we can look at it individually, we maybe can try to help you sort that out. Okay. Anything else, Matthew? I think we might have lost Matthew. Okay.
Nope, I was on mute.
Oh, sorry, go ahead.
If you're on AidVantage now, do you need to make any changes to qualify for loan forgiveness? I do have direct loans. So they have direct loans, they're with AidVantage.
Yeah, so if your loans are not with MOHELA, you need to get, it means you need to get them to MOHELA. And you do that in one of two ways. You either consolidate. Now this individual maybe doesn't have to consolidate because they already have direct loans, and choose you would consolidate and choose MOHELA during the consolidation process, or you would file the PSLF certification forms to MOHELA. When you do that, MOHELA will then transfer your loans from wherever they are over to MOHELA. Now, it may take them a while to do it, given the current circumstances, but if you haven't filed one of those PSLF certification forms, you need to do that. And you should do that based on what we described before October 31st of this year. And I should also just mention, once we get done with the waiver, if you're still in the process of accumulating qualifying payments, you want to file those PSLF certification forms annually and when you change jobs. So after the waiver, there isn't going to necessarily be a specific deadline for filing those forms. You just want to do it annually and when you change jobs, so that you keep a running tally of what your qualifying payments are. Anything else?
No, Nancy, I think that's good.
Okay, well, I just want to say thank you for so much, everybody. And I know this was a lot of information to absorb. It can be a little bit overwhelming. So hopefully you can go through the presentation again. There's a lot of resources that we're going to offer. I want to really thank Matthew and Talon and Jenna for supporting me during the presentation. And good luck to everyone. We'd love to hear your success stories at the end. Thank you so much.
Bye, everyone. Thank you, Nancy.
Thank you, Nancy.
Bye-bye.